Yo, welcome back to another Data Series episode. Hope you guys are enjoying the series so far. I'm gonna be doing something a bit different today. I'm actually gonna be going over the Notion. So all of this data here, I'm gonna be going over and just trying to see what my pros and cons are, what my patterns are with my L's and W's. So I've already put this into ChatGPT and I've already covered this on my video that I recorded before, but my mic wasn't on, so I have to re-record it. So my strengths: W's are structured, I journal deeply, and good discipline on no trade days. I almost win when high time frame bias or PD raise and low time frame confirmation are all lined up. This shows you're not randomly clicking, I'm systematic. This is just kind of glaze, but I'm good at journaling basically. No trade days is an edge, more instead I don't force trades, so that's good. Weaknesses: I overweight on high time frame bias, and my RR trades, my low RR trades, they turn into break evens or underwhelming wins because you entered late. I don't really agree with that one because the RR, if the draw is there, I think probably will take it. I don't know. Narrative override: a couple hours happened when you wanted one side, but the market showed the opposite on lower time frames. This is psychology leak, confirmation bias. Yeah, I do agree. But I don't know how to fix that bit though. So I'm actually gonna how do I fix this? So then patterns across, we're gonna finish this off first. Patterns across: W's have high time frame and low time frame alignment. Their premium and discount are respected, and there's drawn liquidity. L's mid-range entries, discorrelation, ignoring low time frame shift, overconfidence and narrative. And no trade days, usually days with sharp discorrelation, no model, and looking back, skipping was correct most of the time. Overall impression: you're on the right path, the process is solid, and journaling is gold. With the playbook rules, so these are the playbook rules, I'll show later. Right now my no trade days are actually a sign of strength, not weakness, because you're waiting for your setup instead of gambling. My trading edge is already there, but the leaks are more psychological more than technical. Okay. So, and then I asked, what can I do what can I follow using this data to maximize my trading edge? And this is the playbook. So high time frame bias should be aligned, and it should be context clear. Pricing premium or discount of the current range, yes, and NQ not in strong disagreement, and low time frame confirms direction. Okay. Kind of already doing that bit, but it's kind of, I think this bit is the most psychologically defeating part, because I feel like every time I look at 4 hour or daily, there's always something. Well, that's like unconsciously always something, so I'm always trying to force something out of the market, but sometimes it just isn't clear, so I gotta just suck it up and no trade day. So risk tiering, high time frame, low time frame aligned, premium discount respected, yes or NQ agree with each other, order flow wise, and there's a clean draw on liquidity. And this is my bread and butter W's. De-risking: if they're in disagreement, or lower time frame confirmation is messy, or not in premium discount but still clean model. These setups win sometimes but don't carry as much edge. Actually, not really. I don't really like this bit. But keep going. Tier 3, skip or no trade, mid-range chop, high time frame or low time frame totally opposed, no clean model, don't force it. Okay. mid-range shot, no clean model inputs. Okay. And general efficiency, each day just log. Bias pre-market, was high time frame bias clear, was ES or NQ aligned, did price respect premium or discount, did I take the trade, and the result. This lets you see where I break my rules versus where you make money. So I might make a Notion template to just log these sort of data. Psychological guardrails. Don't overweight high time frame bias. Remember the hours came when you ignore low time frame flips. Don't chase late. If RR is less than 1 to 2, skip. If unsure, reduce size to 0.25 or 0.5. If assets diverge, give more weight to one with cleaner structure. Growth path. So now my W's I know is where clean alignment setups are. My L's, narrative bias, mid-range, forcing and chop. My no trade days is mostly correct discipline. The growth comes from trading fewer but higher quality tier 1 subs. Maximization rule, if you just stick to tier 1 subs, you'll trade less often, but your W/L ratio and equity curve will explode upward. Do you want me to map your last 2 months? No. Okay, so I'm going to ask ChatGPT how I can fix this narrative bit. Because sometimes lower time frame shifts to go to EQ. Actually, no, that doesn't make sense. How do I fix this? Good eye, that's the narrative override leak. You were right. A couple of your hours came from sticking what you want to see instead of what the lower time frame actually confirmed. Here's how you can fix it. Force on high time frame versus lower time frame check. High time frame daily 4 hour. Lower time frame 15.5. Same or different? If same, tier 1, take it. If different, either skip or must de-risk. Every time you feel like ignoring the lower time frame because the higher time frame looks so good, log it as override yes or no. This way you will actually track your bias leaks. Data will show how expensive they are. Write out both sides before open. I actually kind of like that. Write out both sides before open. Pre-market, literally write bullish case, bearish case. This primes your brain to stay neutral. If the lower time frame flips, you will already have the bearish plan written down. No resistance to switching bias. Damn, I'm speaking so much, bro. Decision rule. If you see yourself rationalizing, but 4 hour looks so bullish, so I'll ignore that 15-minute inversion. Hard rule, either skip or take it at half risk max. Visual cue on your chart, color higher time frame bias zones blue and low time frame zones green. If price is in blue but rejecting green, you'll instantly see the conflict and autopilot narrative override. If you implement the lower time frame, high time frame versus lower time frame check, write both sides pre-market, you'll cut a huge chunk of those unnecessary hours. So I'm gonna ask, what if say bias is bearish, low time, and price has reached back into EQ premium, but lower time frame suggests at that moment I'll say medium time frame suggests at that moment is bullish. So what if I say bias? What if say bias is bearish and prices reach back into equilibrium? The medium time frame suggests. Oh yeah, do low time frame suggests that moment is bullish. And there is an entry for buys, do I take that or simply just go trade? So high time frame is bias is bearish on shorts overall. Price at equilibrium. Location is correct for shorts. Lower time frame is currently showing bullish. Entry is available, but it's for buys against your high time frame bias. Correct handling. No trade until lower time frame flips bearish again. If you really want to participate, you can scalp longs at half risk, but only if high time frame target above is clearly obvious. You treat it as a counter trend play with a smaller RR. Otherwise, it's just noise that shakes you out of the real short that you wanted. Why no trade most of the time? Your best RR trades come from high time frame and low time frame alignment. When they diverge, probability drops and chop increases. Your journal showed this. BU or chop days often came from this exact setup. If high time frame is bearish, only take shorts from premium or EQ. If lower time frame disagrees, skip the long and wait for the bearish shift. If there is a clean The exception is if there's a very clean high time frame draw to the upside, counter trend scalp, take profit fast. Okay. This is the difference between trading with discipline versus trading what you want to see. Most of your W's came from waiting for the alignment. I want to add this as a counter trend rule. So wait. But if there are reason for both sides on the higher time frame, for example, high time frame EQ, like 4 hour, actually I don't really like that. For example, actually no, we're not on the same thing there. Anything else? Because I think that's where I'm stuck on a lot of the time. Playbook. Okay. So this is the new rules that I'm going to be following, hopefully. So tier 1 rules, must have to take a trade. So I need higher time frame bias alignment. The location, shorts only in premium, long only in discount. So I'm gonna change that a little bit. Get that out because it's 1 hour EQ, but 5-minute shift in premium. Say bias is long. Range. That's long, yep. If 1 hour range, but 5-minute shift on premium, hold for range. And we in 1 hour busy. I would want to see longs out of that. Is there any subs or is there any else where this failed? This theory failed using data given without any other user error. So you're saying basically bias is bullish, price pulls back into the arrow BISI. Then on the 5 minute you get bullish shift. Those you took in the situation when you bought out of a premium BISI just because the time frame fit bullish. You noted was in a 4 hour, 1 hour BISI in premium, bullish 5 minute shift, but it failed or got stopped. Usually this happened because price was rebalancing or distributing lost down, a true continuation. W's you got from BISIs were always in discount, or at least aligned with the high time frame draw. So the pattern is BISI in discount. Oh. Are you sure there wasn't any other user error on that? This part of the BISI and wanted to use it for continuation. The problem was its location. The BISI was saying on the premium over the range price top, so it gave you a 5 minute bullish shift, but instead of expanding, it either chopped or reversed. So no, these weren't user errors like mistiming, bad stop placement, or ignoring correlation. There were structural errors, treating a rebalancing error in premium as a continuation of signal. If you filter those out, those trades simply wouldn't have been touched. Oops, wasn't locked in yet. Do you want me to go to your journal and list it? Yeah. The longs from a BISI in premium, or you took shorts from a Sabine discount and the trade failed without any other clear user error. This is what I found from journal notes. 4 hour imbalance taps, intro bias, 1 hour consolidating. So you create not sure what to do. Structure looks good both sides. Took longs from 1 hour BISI in premium and did break even or loss. Issue wasn't execution, it was that BISI was on premium rebalance and not continuation. Now looks bullish, retrace higher than down. That does sound like me. Trade longed off a BISI in the premium zone, ended up respecting high time frame bearish. Again, not a mistake where the model itself was flawed. Daily change in state, bearish wants to see lower, price reach discount, create the CB, short it, chopped, no expansion, eventually break even or loss. Really? Question 2 into journaling, I only found 3 trades that clearly fit the supreme BISI discount CB trap. If you had filtered them out, that's 3 fewer losses straight away. No wins would have been deleted because none of the successful trades came from that invalid location setup. Really? That's crazy. Wow. I'd have to look at that. I'm surprised. What? I'll still use it. But I'll put more significance during journaling on this can you make a journaling a fresher journaling template? Oh, not template. Fresher journaling thing, which helps me depict what this what mistakes and not mistakes, which helps me depict what mistakes are not mistakes. More efficiently. Sometimes they're like odd, but you want your journaling template to show you, was this trade valid structurally? Premium discount? Was it user error? Was it a model error? That way over time you'll see exactly what's killing you and what's clean. There's a fresh journaling structure you can copy into Notion. Okay, so this is the last part of the episode. I will be making a new template, a new journal template, and this is probably going to be it. So we'll go through it real quick. So trading journal template, trade details, the date, the asset, the session, Asia, London, or New York. Okay. Bias and context, higher time frame bias is bullish, bearish, or neutral. I'll probably put unsure as well there. Oh, actually, neutral kind of counts as unsure. Range, location, discount, premium, or mid, or equilibrium. Low time frame confirmation, yes or no. Model used, location of model, valid or questionable. Okay. Okay. Execution, entry reason, stop placement. De-risk applied. Outcome, win, loss, or break even. R multiple, was TP available before stop. Error classification, structural error, user error, or market noise. Notes and emotions. In one glance, you'll know if the loss was because of a bad setup choice, or if it was your handling of it. Over 20 to 30 trades, you'll have a clear heat map of your mistakes, easy fixes. You won't need to reread words or text, just tick and move on. Okay, so hope you guys have enjoyed that Day Series episode. I need a haircut. And yeah, I'll see you guys in the next Day Series episode. I will be starting on probably the 4th month. Wait, no, 6th month, on June. I'll probably be starting on June, I think. Yeah. Instead of, I'll just be skipping 26, 27, 28 of May. And yeah, just starting straight on June. Okay. Like, comment, subscribe. Love and appreciate you guys. You guys. Peace.